Okay, we're live. Hey, everybody. It's just a little after 4:30. We're getting started with Be the Boss of Your Money. Thank you so much for joining me. This is my live stream show. It's about personal finance, investing. Lately, it's been about what's going on with this very volatile market. By the way, volatile, it's not really volatile. Volatile means something goes up and down. you know, it volatile means shaky, up, down, up, down. This is not volatile. This is just a straight down market. It's been very painful. We've got news for you in crypto world, as well as stock land and bond land. A lot going on. But the idea today is to um, shed some light on what's going on, give you perspective, some color on what is happening with financial markets, how it relates to the economy, how it could relate to you. And then, uh, give it enough perspective so that you are comfortable with what you have so you don't make any rash decisions, or so that you maybe realize that you then have, let's say, an investment plan or investments that are appropriate for you. Maybe you just bought what was hot, so you went into some crypto. Maybe you bought 3 or 4 different cryptos. Maybe you bought some pandemic stocks. Maybe you took a shot on Moderna, on Zoom. All the hot pandemic stocks, and you shunned maybe other stocks that are more stable, like consumer staples or drug stocks. I'm not talking Moderna. I'm talking like companies like, you know, Johnson and Johnson or Merck or Abbott, big companies. And now you're wondering, what should I do with this stuff? Does it ever recover? Or did I just like blow a huge hole in my net worth that is never going to be repaired? I'm just going to have to go back to the drawing board and save and invest even more in order to reach my goals. That's what's tough about this market. That's why I've talked about these pandemic stocks endlessly. And if you watch the show, I'm negative on them the whole way up. And because I said, when these things blow up, I said it reminds me of the year 2000, when the internet stocks went up and then blew up. And it took like 15 years for the Nasdaq to get back to even. This is a very tough thing to be faced with. Most investors will probably not do anything. Let me rephrase that. Most investors don't actually need to do anything. But those who are down 70, 80, 90% or more, like in a Peloton or a Beyond Meat, the stocks we talk about all the time, people in those will probably not do anything because they're afraid to sell them, because they think that they're going to come back. They're going to somehow have this massive rally. We're all going to wake up and realize how stupid it is for these stocks to have sold off. I think if you watch the show, I've talked about how stupid it was for these stocks to go up so much. Now, during the pandemic, that's one thing. There was demand for them. Their businesses are what enabled us to work from home, stay at home, and be happy and get us everything we need. But we're going out now. If the situation has changed that led to the rise of this cohort of stocks, then what do you do when the situation has changed? That is no longer a wind in the sail of this cohort of stocks, right? So I don't want to be overly specific with recommendations, because these are unique to every individual investor. And not to say that there aren't really high quality blue chip stocks that are all of a sudden down on their butts, like Boeing and Disney, a couple of other choice names, or not to mention Amazon and Facebook, which is better, and a few others. So this is what we're faced with. And now it's decision time. Do you buy, sell, or hold these stocks? So we've got a few things to get into. So let me roll the quick intro, and we'll get started into the show. I can't believe it's Wednesday already. The weeks are flying by. So here we go. Here we go. Now. All right. Thank you for joining me. While you're watching this, if you have any questions about what we're talking about or other matters that are related somehow to investing or personal finance, go ahead and ask me in the comments. I love hearing from you. I love answering your questions. It's, to me, the most fun part of doing this. And while you're watching, leave us a thumbs up or a heart reaction or some reaction so I know you're out there and I'll see you. I always appreciate that. Plus, it helps spread the good word about the work that I'm doing here behind the scenes to educate you and bring you the what I think are the perspectives that you need to get through and achieve your to get through this mess that we're in and to achieve your best version of your financial self. That's a cool tagline. I need to remember that one. I come up with these lines and I'm like, damn, I wish I remembered them, I should write them down. It's like telling jokes and hearing good jokes. You're like, oh, that is such a good joke. The next day you're like, damn, I wish I wrote that joke down. Okay. So here we go. Let's first take it to the lead. Inflation barreled ahead at 8.3% in April from a year ago, remaining near 40-year highs. Okay, this is by Jeff Cox, who's a prolific writer, journalist, financial journalist at CNBC. I think Jeff would actually be like really good on the Federal Reserve Board of Governors. He knows so much. It's just the guy is a wealth of knowledge, and he writes about markets every single day, several times a day for CNBC. So follow Jeff if you aren't already. But the consumer price index popped 8.3%, more than the 8.1% estimate, near the highest level in 40 years. The highest level was 8.5%, which was the print last month. But the core, excluding food and energy, is also rising 6.2%. Shelter costs are going up, but really, it's the cost of everything. Inflation adjusted workers are falling further behind. So even though workers are making more money, inflation is going up even faster. So this is it's a very big deal, and it impacts standard of living. And it does it in small ways. All right, so this is up a little bit. I'll have to buy it. This is up a little bit. I'll have to buy it. But when you fill up your cart at the supermarket or a Costco or a Target, and you're like, wow. And then you fill up your tank of gas, or if you have to pay for heating oil at home, you really feel the pinch of what's happening with this. Certainly, if you're buying a new car. I know for me, I have a car that I lease, and it's going to come off lease, and I'm pretty committed already to the thought of not pretty. I'm committed. I'll have to buy the car because you can't even get a replacement car, and if I want to lease a new car, it'd be like hundreds of dollars more per month than the car that I'm giving up on the lease, which doesn't even have that much mileage on it. So these are the kinds of decisions, though, that people are making. Buying out your lease at the end, your car at the end of the lease, or should you take home equity out of your house? Should you get an adjustable rate mortgage? These are the questions that people are having, with themselves, with their, significant others, with their advisors every single day. All right, so let's take it to the big board and see how things closed up today. All right, tough day. The Dow down 326. It was down like 80 some odd points yesterday, after popping up 500 points down and wound up going down yesterday. Today it was down. Then the futures were up like 250 or 260 at one point, and then the inflation figures came out, and that was pretty much it. So the Dow down 326 points. NASDAQ down 373 points, which is 3%. NASDAQ was down over about 4.5% on Monday. It was up a little bit yesterday, but then gets crushed again today. So NASDAQ just keeps going further into bear market territory. S&P 500 off 1.65%. And that is it's at 39.35. It has to get to 38.55. So about 80 points, another 80 points or so, and we're in bear market territory. So, 1.5 2%. We're there. Nasdaq down 65 points. I'm sorry, S&P down 65 points. By the way, when I talk about the S&P 500, Dow Jones Industrial Average, Nasdaq, these are indexes, as you know. You cannot invest directly into an index, but you could invest in a security that tracks or mimics an index. Got that one in there. I also, I want to give a shout out. I see my friend Jerry is out there. Good to see you, my man. Jerry, always checking things out. Jerry's like this guy. He's always learning. He's, you know, even though he knows a lot, but you're always learning new stuff, learning more, and that's what I love about you, man. Love you, bro. Okay, oil up 5. That's a big move for oil. Uh, I think I moved these things around. Did I move them around? What did I do here? Anyway, 10-year at 2.92%. The yield, you would expect the 10-year treasury to go up when you have these high inflation numbers. It went down. There's two reasons people give why it went down. The big reason is that people shifted money out of stocks into bonds. The smaller reason is some people will say inflation may be peaking. I've heard a number of times inflation may be peaking or near peak levels. I'll see it when I believe it. That came out wrong. I'll believe it when I see it. Too many people are calling for tops in inflation, bottoms in the stock market, bottoms and tops in interest rates. People don't know squat. You just have to give it time and you'll find out. The VIX is only down 1.3%. So VIX didn't have a big move. Considering how much the markets were down, VIX didn't really do much. You would have expected the VIX to go up. It actually was down today, which is pretty. This is this over here. It's pretty unusual to see that. You would have expected the VIX to be up on a down day, not down on a down day. But that's just me. Let's take a look at bonds. Bonds. 3-year 2.82. The 10-year 2.92. They're only 10 basis points apart. Yield is starting to flatten a little bit. Not totally flat, but definitely getting to flatten out a little bit. That is a sign of discouragement, a lack of belief in the economy, a lack of belief in policymakers. You know, it's very hard to believe that the Federal Reserve, it's very hard to believe that it could engineer what's called a soft landing. Inflation is very high. The Fed has to move quicker and bigger in order to tamp down inflation. But when it does that, it raises rates, slows the economy down, and it could cause a recession. But you can't have lowered inflation without a slower economy. All right. Filippo, market going to zero, mass hysteria. Well, a couple more days like this over the next month or so. Yeah, maybe, right? The slow bleed is worse than the COVID drop. People are more worried right now due to leadership versus back when COVID started. I think there's a lot of truth to that. COVID was just, we were worried about COVID, safety, economy shuts down, recession, stocks go down. We were living in the moment. We were in crisis mode when COVID hit. We're not really in crisis mode now with regard to COVID, although there's always a crisis around like inflation right now, but that's besides the point. All right. So crisis mode. Yeah, I agree with you, Philly. It's people look, there's that there's a lack of confidence in leadership when the president's poll numbers are so incredibly low. And the only way for those poll numbers to go up is for inflation to go down. But if you squash inflation, you also squash the economy for a little while. And then finally you have a rebirth when we have an economic recovery, let alone a economic expansion. What else says Philly? The 2020 drop was like a Band-Aid, quick versus is a slow Band-Aid, pull which hurts more. Yeah, definitely. This is what we're having now in the market. It's just a slow drip, just constantly going lower. And when you think it can't go lower, it goes lower. As opposed to 2020, it was understandable. The economy shuts down, the market goes down. We came back so quickly, people didn't even have a chance to react. And then the rest is history. And then we went up, and now we're all the way back down. Even Amazon has given up its pandemic gains. Think about how unbelievable that sounds when you think about it, right? Jerry is, oh, hold on. I'll get back to you. Jerry says, and I'm learning from the best. Thanks, Mitch, for your fabulous words of wisdom. Thank you very much, buddy. Peace. I really appreciate that. That's super kind. And Rhonda, why is the gas going up so fast? Fast gas. Gas pass. That's like a tongue twister. Gas is going up because oil is going up. Oil trades on the global market. It's priced globally, although U.S. oil, which is West Texas Intermediate, is typically cheaper than Brent, which is the international benchmark for oil, whether if it's drilled in the Brent Sea or comes from Russia or Saudi Arabia, it's Brent. All right. So why is gas going up? There's a lot of reasons why, but basically oil goes up, gas goes up. I think that's something we pretty much understand. So, well, why is oil going up? Well, we still do import oil. Oil usage, it's tough to predict. You'd think with a slowdown in China that oil would be less. That was the reason why oil dropped from like almost 130 down to like 92 a few weeks ago. But China's expected to start coming back on the global system, the global economy. Cities are opening up. So that's one thing pushing oil prices high. I know what somebody's going to say. You know, if we just had this pipeline, everything would be fine. The pipeline would take years and years to finish. This, you know, I'm talking about the Keystone Pipeline. It is the equivalent of sludge. You know that stuff that you pave your driveway, like you get a new driveway and you put that thick tar, you know, it's basically pitch with little pebbles and it's all black and hot and it's got to be steamrolled and it moves very slow. That's basically what the oil tar sands are from Canada. It takes a lot of energy to get that sludge to move less than 1 mile an hour through a pipeline. It could be good. It would definitely add to energy security. So, in that respect, that's the number one reason why you'd want it. It has nothing to do with the economics. The price, even at $100 a barrel, you're probably still losing money on refining Canadian tar sands. You've got to basically get it to the point of boiling temperature for it to even move less than 1 mile an hour through a pipeline. So, there's a lot to it. I hope that helped. Okay. Where were we? Okay, we looked at the bond market. Let's take a look at the crypto. Some big stuff happening in crypto. So Bitcoin didn't just go under 32,000 like we were reading over the weekend. I don't know if you follow this Bitcoin over the weekend. I do. And then it went under 31, then under 30. And now I'm like shaking. I'm like shaking my head. I can't believe how much it's down. 28,000. Now, Tom Lee of Fundstrat is still a believer in Bitcoin. He still thinks this is a great thing. And he says these big drawdowns happen from time to time. And that's true. We've seen Bitcoin get crushed here and there, and it always rebounds to a higher level. But I think you could say the same thing with the NASDAQ. And I think Bitcoin basically tracks tech stocks. I think it's got a high beta, meaning if the NASDAQ goes up 1%, Bitcoin could maybe go up 5 or 10%. And same thing on the downside. I don't know if that's the exact ratio, 1 for 2 or 1 for 5 or whatever it is, but there is a magnified reaction in Bitcoin to the more speculative assets of the market, which are often found in the NASDAQ. So that's Bitcoin. And, you know, the cryptos across the board are down. Bitcoin Cash down 20%. Ethereum down 13.74%. Litecoin down to 65. Dogecoin down to 8 cents. That's the one that Elon Musk touted on Saturday Night Live, and people went out and bought it because of that. That's it's a shame if you bought it and lost money on it, but that's what happens. It's just totally speculative. It started as a joke. This is why I always say don't just buy something because a billionaire said to buy it. Their goals and their wealth and everything they look at could be very different than how you look at it. Okay. So the news is this: controversial stablecoin UST, which is meant to be pegged to the dollar, plummets below 30 cents. That's pretty effing huge. Okay. A stable coin is like a money market. It's supposed to maintain the dollar price. And this one as low as like 29 cents at one point today. And the reason it's so controversial is because it's not even investing in like dollar, it doesn't have dollar reserves. It has Bitcoin. So Bitcoin plunged and it hurt the value of this. There's more to it than that. But the bottom line is this is a really bad knock against crypto. And it shouldn't have happened. This UST dropping the way it did is going to take a lot of the wind out of the sails of people who want to believe crypto. Right? Let's take a Luna. It's a sister coin, and that was down 95.89% today. Great. I don't know what that chart's telling you, but let's look at the 5-day. Here we go. Look at that chart. Look at that chart. 95%. I'm not really sure what the hell the problem is, but when you have something pegged to the dollar, it's supposed to be invested in dollars or very short-term, safe, stable reserves like short-term treasuries. So, and this is a knock against it, because if you're thinking about investing in crypto and you're like, I could lose 95% of my money in one day, it's such a setback to the whole crypto world. And it shouldn't happen. And the only thing that has to do with Bitcoin is that I could imagine that UST stablecoin has to sell securities, and maybe other stablecoin operators have to sell them. And maybe that's what's putting so much pressure on Bitcoin, is the forced selling. Could be, and I'm sure we'll look back at it and find out, exactly what it was. Keith Wilson, financial advisor, by the way, in North Carolina. This too shall pass. There are opportunities. Is it North Carolina even? Sorry, I think it's North Carolina. This too shall pass. There are opportunities that are presenting themselves both in investing and your financial plan. Well, one of the opportunities you spoke about is converting your IRA to a Roth IRA. And if you want to do that, you should definitely call your financial advisor and explore the idea of doing that, and speak with your CPA as well. But what happens is when you turn your IRA into a Roth IRA, it's like making a complete full withdrawal or a partial withdrawal from your IRA. That money is taxable. And then you go right into your new Roth IRA. You want to pay the taxes out of an account that does not hold your retirement assets. So if you don't have the money set aside to do it, or you can't make the money and save it so you could pay the taxes in the near term, it's probably best that you don't do the Roth conversion. Just my opinion. Okay. By the way, what happens after the Roth conversion comes, and the account grows tax-free, and when you take the money out for your retirement, there is no tax on that money. So you pay the taxes now by doing a Roth conversion, as opposed to later when you're going to need the money goes tax-free. There is no required minimum distribution for Roth IRAs as well. So a lot of people like that feature of the Roth. Okay, let's keep going. And we did the big story of the day. We checked out the currencies. We'll get to the watch list in a moment. We did cryptos. The VIX. I'm surprised the VIX went down. That should have gone up today, but that just goes to show you that not everybody's looking at the market like it's broken. I should be showing you this over here. This is the VIX. All right. Not everybody thinks that the VIX is broken. There are those people who think that the big stocks could turn around, that FANG stocks are ready to buy. We shall see. What do you think, Mitch? I think you buy now, you buy later, you buy later, you buy more, and you buy more. I don't know what the bottom is of FANG stocks or anything else. Could we be near it? Yeah, we could be near it, but we could also be far from it. We could go down a lot more. I've seen markets do a lot worse than what we're in now. We're not even in a 20% bear market yet for the S&P 500. I've seen S&P 500 go down over 50%. So let's take a look at some after hours trading. Disney. This is odd because Disney was up like $3 in aftermarket trading, like when I started this live stream today, and but Beyond Meat was down when I started it. Beyond Meat down 23% in aftermarket trading, down to 20. This was $160 stock, down to 20. It's like a $16 stock going down to 2. Have you ever had Beyond Meat? If you did, you might understand why this is down so much. It's just kind of gross. It did not taste like beef to me. It was kind of yucky. Yeah, it was gross. But wow, I'm really shocked. Disney was just up a few minutes ago. So you know what? Let me show you this. Sometimes I forget to show you my screen. So Disney just hit a 52-week low. The stock popped after they announced numbers, and here we are down $1.51. Their subscribership numbers for Disney Plus looked like they were pretty good. And Beyond Meat. Hey, while you're watching this, just let me know in the comments. Do you think that Disney is a buy now? Do you think that Beyond Meat? Do you think Beyond Meat is a buy now? Beyond Meat was down almost 14% today, and down another 23% in aftermarket trading. Okay, so down 36%. It lost a third of its value, down from 160. So is this something you'd buy as a stock or Disney? Let me know in the comments. I'd love to hear from you. And while I've got you there, my friend Joe, I owe you a message on Facebook big time. I get you. Yeah, crypto is crap. Market is way overvalued, and PE is not counting all the speculative money in crypto. PE is private equity, by the way. Speculative bubble is bursting, will cause a run on crypto, which will impact general markets and stocks and bonds. Continuing slow bleed and maybe capitulation one day. Would it be nice if we finally had the capitulation day? But that's part of what a bear market does to you, right? Continuing the conversation, Diz is a hard sell. They took a political side and lost half their customers. That is a problem. I don't know how it's going to affect them long term. There are other stocks that are down a lot too, but I don't think Disney anticipated the reaction that it was going to see in the political sphere. And they probably thought, well, we bring so much money to the state and we're so great that no one's going to really try to hurt us. But there you go. Rhonda says, I would like to buy Disney. Taking the opposite side of that trade, mother of mercy, is Rhonda. Hi, Rhonda. So Rhonda takes the other side of that trade. Oh, PE meant price earnings, not private equity. Okay. Thank you for clarifying. James, I need to remember what time you start, Melbourne time. James is in Australia, if you haven't figured that out when he wrote Melbourne. 4:30 Eastern time. Lately, it's more like 4:30 to 4:40, but whatever. And Joe says, looking good, Mitch. Thank you very much, buddy. You know, I've been working out. I'm eating very clean. I got a couple more pounds to lose, but I feel like pretty buff. I feel good. I have like no injuries. Anyway, thank you very much. I really appreciate that. What else do we need to look at? One more thing we'll take a look at are the FANG M stocks. My FANG is different than your FANG, by the way. Okay. Hunter says hi back. Joey rolling. Roll that emoji is ROTFL, rolling on the floor, right? So thank you very much, Joe. Thank you, Rhonda. And yeah, so yesterday we had the opposite. NASDAQ was up like 150, 160 points. These stocks were up. Now they're down. My Netflix is different. My Netflix, gee whiz. My FANG is different than yours because most people look at the N as Netflix and FANG. I got rid of Netflix a long time ago out of this group, and I added NVIDIA, which is down a hell of a lot also, by the way, just not as much as Netflix. Okay, but Amazon down over 3%, Apple down over 5%. That is a big drop for Apple. Apple rarely goes down that much. By the way, Apple is no longer the biggest company in the world. They were surpassed today by Saudi Aramco, the giant oil company of Saudi Arabia. I don't even know if you count it as a company because it's like so government controlled and government owned. I don't know if you we count that as a separate company, but that's what I'm hearing. All right. Amazon down 3%. These are big drops. Facebook down another 4%. Google down a little bit, but Microsoft down over 3%, Nvidia down over 5%. Nvidia is just like breaking my heart every single day. But these stocks are down a lot, and when they go down, it brings the whole market down. So you're not going to get any lift off without these. All right, so that's my story. I'm sticking to it. Thank you so much for watching. See you tomorrow. Peace out, peace in, and whatever the kids say. Don't forget to smash that like button and subscribe and hit that bell notification so you never miss another episode. All right. Talk to you guys soon. Thank you very much.